Yeah, so in terms of our results for last financial year, I mean, our revenue was $192.8 million, which was up 22.6% on the prior year. We also had gross margin expansion up from 62% to 65%, which resulted in our gross profit being up 28.6%.
Apiam Animal Health Ltd, AHX on the Australian Stock Exchange, is a group that looks after a mixed breed of animals, range of animals rather, from household pets through to dairy, pigs and racehorses. And joining me right now is Dr. Chris Richards, who's the Managing Director for Apiam. Hello, Chris.
Hi, Tim. It's great to be with you today.
It's very exciting to have you on. Now, I've noticed before we touch on your strategy going forward, let's just briefly touch on your last quarter's results and the two recent acquisitions that you've made.
Yeah, so in terms of our results for last financial year, I mean, our revenue was $192.8 million, which was up 22.6% on the prior year. We also had gross margin expansion up from 62% to 65%, which resulted in our gross profit being up 28.6%. So that flowed down through to EBITDA, which was $12.8 million, or up 11.6% on the prior year.
They're phenomenal results. Now, you've got a strategy for moving into regional areas, particularly for domestic animals. Can you just outline what that strategy is for the furry featured friends?
Yeah, well, I mean, our business is all about rural and regional clinics. So we've always been focused in the rural and regional areas. But what's really changed in our business over the last 5 years is that previously we were predominantly providing services to the livestock industry. But that's really changed now. And over 50% of our revenue is now coming out of the pet segment. So, that's really been on the back of the significant growth in pet numbers that occurred during the pandemic. There was a 26% increase in dogs and cats during the pandemic. And we saw an increase in household ownership of pets from 61% to 68%. So, as a result of that and the regional migration that's occurring, our pet business has been expanding rapidly over the last few years. And in fact, over 80% of our veterinary clinics now have over 50% of their revenue coming from services that we're providing to pets.
Wow. That doesn't discount your feedlot revenue, the pigs and feedlots. How is that shaping in terms of the revenue mix?
Yeah, well, that part of the business, providing services and products into the intensive animals, it still makes up 23% of our overall revenue. It's an important part of the business, not only in terms of the revenue, but it provides a career path for some of our mixed animal vets who want to end up going into intensive animals. So, last year, our feedlot business, it was still back on the previous year, having come off 3 years of high rainfall where less cattle come into feedlots. But obviously, as many of your viewers will be aware, it's really starting to dry off, particularly in Queensland and northern New South Wales. And, as a result of that and the pending El Nino effects, then we're expecting cattle to start flowing back into feedlots at sometime over the next 6 to 12 months. But, it's certainly starting to look that way at the moment. If you look at the overall business in our pig business, we actually had growth in FY23. We had 3% revenue growth, but importantly, we had 5% like-for-like growth in the second half as those effects of Japanese encephalitis that occurred last year have really washed out, and now we've got more pigs flowing back into the market.
I mean, the group's got a huge employee base, 1,300 employees and 330 vets. Now, with the expansion into these regional areas, the two greenfields, Caboolture and Yarrawonga, and the two more recent ones from the last quarter, what is the strategy for recruiting qualified vets that can keep up with the expansion of the business?
Yeah, we as a veterinary group, you might have heard about a rural vet crisis. Well, we really haven't been affected as much, particularly in the last 3 to 6 months. We've seen a real changing in what's happening in that regional vet space, and a real loosening up in terms of that shortage. So, we're able to attract vets, and we've been able to, significantly increase our numbers over the last couple of months. So, for us, it's about providing flexible workplace practices. We're quite unique as a veterinary group. We have 66% of our vets are working full-time, as opposed to the industry where only about 50% are working on a full-time basis. And we're seeing that not just across all our vets, but our female demographic, which makes up 72% of our vets. Still 63% are working on a full-time basis. And we're seeing that, we think, because of those flexible workplace practices. We've got about 80% of our vets are working compressed weeks, either 4-day weeks or a 9-day fortnight. And so that's enabling them to balance the high stress that, loads that are occurring when they're at work, but also be able to balance that around their lifestyle and what they want to do outside of the workplace. And so that's where I think we're really kicking some goals at the moment in attracting not just young but experienced vets to the business.
And so the strategy for growing the business over the next financial year, what are your projections for that?
Yeah, I mean, we expect our business to continue to grow organically at particularly the mix side at the same rate that it did last year, which, as I said, was 4.9% on the whole year. So, that's what's going to happen from a revenue point of view, we believe. Our focus really is to focus on the 20-odd clinics that we acquired over the previous 2 years and make sure that we're really integrating those well and getting some real synergies out of those clinics. So, part of that is around restructuring some of our clinics, and we completed most of that, if not all of that restructure in June of 2023, which will drop $2.6 million to the bottom line. Our real focus now is making sure that those clinics are very effective with their resources, and particularly around rostering and utilising those labour resources. So, yeah, that's really our focus. Is we know we're expecting to continue to get revenue growth, but both organically and maybe a small number of acquisitions early on. But our real focus is around really getting margin expansion over our earnings. So if we do that,
growing the existing acquisitions.
Yeah, existing business, growing the existing business, but really getting more earnings leverage out of them. So that'll enable us to generate more free cash flow. We are a very cash flow positive business. We generate great cash flow, but we can generate a lot more, and that'll fund our future growth as well as reduce our debt levels.
What a terrific story, Chris. For investors watching Apiam Animal Health on the Australian Stock Exchange, AHX, go look them up now. Forget about lithium. Dr. Chris Richards, thank you very much for joining us today.
Thanks, Tim.